Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Monday, February the 24th, the year 2020. Let's talk trading. Charts. That's what you're probably been looking at when you trade, is you look at a chart. Well, what is a chart? It's basically a representation of the market. It's not the market itself. It's not the entity that you're trading. All it is basically a history of price. But the funny thing about charts is many of the things that you do with a chart and have on your chart and how you use your chart is based on beliefs. And beliefs are very powerful. I was pondering this right before I started this video because there's been a lot of bloodshed over beliefs. I mean, it's going on today. It's been going on for centuries. I mean, people can get so worked up when something or someone or some group goes against their belief. And some people believe in their beliefs, once again, they'll die over them. They will do whatever they can to impose their beliefs on others. And so when we look at a chart and everything on it, it's based on beliefs. I mean, now some of these beliefs might also have some basis in fact. For example, I believe if you buy or sell near or at the open price, near or at the open time, that, based on history, you have a chance of exiting that trade before the end of the session, end of that trading day, and make a profit because the high is usually higher than the open and the low is usually lower than the open. So that's my belief, but it's also a fact. I mean, that's what created the buy zone. Or that's how I came up and created the buy zone. But, some people say it doesn't work. It doesn't work for them. Just because it doesn't work for them doesn't mean it doesn't work. I mean, we've all probably faced something in life where we tried it and it didn't work for us, but then somebody else came along that had a little more experience or a little more knowledge, or in fact a different belief, and they made it work. So just keep that in mind when you're trading about beliefs. And another belief I have, and I know you guys know I'm going to segue into it, is that you better have your risk management in place on each and every trade so you don't lose any more on any one trade than you're willing to lose on a trade, because that's your risk. That's how you manage the risk. That's how you manage the downside. Now, that too is a belief, but based on history, based on evidence, it kind of moves into the fact category. But of course, there's one more fact that I have to let you know about, boys and girls, fellow traders, non binary people, if any non binary people are watching my videos. And that is that this is a fact. That these videos are for educational purposes only. And it's a fact that your results may differ from mine. And it's a fact that Forex trading, any trading, is risky and you can lose all your money. So, that being said, if you are seeking trading advice, financial advice, or investing advice, seek it from an accredited financial professional. That way, if you take their advice and you lose money, it's a fact that you took your advice from an accredited financial professional rather than some guy with a funny name that makes YouTube trading videos or something that you read off some other trading site or blog or got in your email or stale mail or saw some advertisement, infomercial on late night TV. So the disclaimer's done. Let's get on with it. The dollar yen. When we saw the dollar yen last night, price had entered, or yesterday, last night, Sunday, but early Monday morning for the Europe and Asia traders, price was up here. It entered the upper wick zone. And then as we can see, it's a fact that, price doesn't like to stay in the wick zone, and it came out. And you can see here, it's 113 pips off of the high so far. That's a pretty nice profit. Now, you can see over here in the TRO dashboard that the gap is filled here. But you notice there's still some gaps that haven't filled. So there's some opportunities out there to pick up some pips on the gap fill. Oh, why is it doing that? For some strange reason, this computer is it's been acting up. I can't figure out the why. I'll have to take some time and maybe clean some things off of it. Now, we're only 181 pips off the yearly high, and we're 169. I'm sorry, we're 180 pips above the yearly open, 169 pips below the yearly high. So prices definitely moved. Now, remember the thing about the big bars I talk about from time to time. See this big bar? Okay. Right here. Look for price possibly to return to the 109.84 area. And once again, educational purposes only, and your results may differ from mine. Now we're still putting in the opening range for the week, and it's going to be a big one. It's already 121 pips here today. So will price break out of the opening range tomorrow? We'll just have to wait and see. Now, the weekly buy zone here, price shot up, filled that gap, came back down, came up again, and then right here, just a couple hours ago, it just started heading south. So far the month, 391 pip range, average 292. And remember, you can use these same ways to analyze price on the other pairs. I like to stick with dollar yen, because that way, by me making the video over the dollar yen for days, weeks, months in a row, you can see how you can profit just trading one pair. You don't have to go jumping around from pair to pair, because that way, when the opportunity comes, you don't miss it if you stick on one pair. So for example, you can see that the dollar yen was in that inside bar range of the previous trading day, and you see it dropped out. It's now 94 pips below the low of that inside bar there. That shows you the power of those horizontal line trades off of the inside bar. And so here in blue, we've got some current inside bars in the daily, the weekly, and the monthly. And also the ones in gray, those are ones you can actively trade or seek to actively trade at the moment. Now on the range here, we've got 1, 2, 3, 4, 5, 6 pairs over 100, and many of them are yen pairs. And as you can see, once again we broke out of that previous day's low. Weekly highest open 14 hours ago. Weekly H1 highest open, that is. You can see here price didn't close above it, and it's falling down. And then for those of you once again following the big bars, here's another big bar. Just you can just see it. It's big bars, like the biggest one on the chart. So we might look for price to return to the open of that big bar. Once again showing the buy zone. This one's the daily. We missed that pivot. Green rats, get ready. Now, as I mentioned yesterday, the weekly pivot was 111.15, and as you can see, we take that pivot out about what, 65 or so pips ago, but we did miss the daily pivot, and we're down here between daily S3 and S4 ranges we usually don't actually get to. Now you can see here we took out that missed pivot on the daily here. And let's look at the week. There's this missed pivot down here at 109.36. Still have a ways to go. I'm going to skip over a few charts here because some people had some questions. Where is it? Okay, ATR. A lot of people are still wondering about the ATR, the average true range. So how I look at it is, most times when you get the ATR indicator, people will put it at ATR 14, and then there's the camp that likes to use ATR 5. So I thought, well, there are no magic numbers. So what I did was I created an indicator so it would look from an ATR start and an ATR end. So I just choose from ATR 2 to ATR 14, and I just let the indicator, calculate all those values and find out what's the maximum and what's the minimum. And then that's how I can plot these ATR ranges. So right here on the daily, you can see prices entered the daily, and the ATR for it's ATR 4 looks like the max, and ATR 14 looks like it's the minimum. And so these brown or tan areas, that's the daily. The blue, that's the weekly, upper and lower. And you can see I also plot the halfway point of the ATR 14, which is the min, and then the ATR 4 here, which is the max. And usually price will come and it'll take out the halfway, either on one side, the other, or both. So it took out the halfway open plus half that ATR 14, came back down, took out the other side, and now is actually in the ATR range. So it's moved a full ATR 14 and then some, not quite a full ATR 4 yet. So that's how that works. Now, I think I showed you yesterday, I modified the TRO HL5 to show the ATRs from this one's showing from the previous, actually it's showing from the current day, I think. Yeah, this is showing current day. No, actually, no, this is the open plus the ATR from to actually the last 5 days. So you can see here we've got open plus and open minuses from the different days. Can also do it off the highs and lows, but that's how the ATR is working. But anyway, boys and girls, beliefs are powerful things. So check your beliefs, because it's not what you trade, it's how you trade it. So go out there and drain the banks.